Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate news. And apparently today we're going to be talking about a company that might be facing a bit of a bumpy ride. Get ready to decode the latest filing from Enhancement Technologies Holdco Incorporated as we dive into the nitty-gritty of why they might be on Nasdaq's watchlist. If you are new here, smash that subscribe button and join our growing community of corporate analyzers. We also have a Discord channel linked in the description below where we break down these filings in real time. So what is this all about, you might ask? Well, according to this report filed on the 20th of February 2026, the company received some rather serious news from the Nasdaq Stock Market LLC, or Nasdaq as we know it. It's essentially a formal notice saying, hey, your company's stock value has dipped below a certain level, and you need to fix it. Specifically, Nasdaq noticed that for 30 consecutive business days, the company's market value of listed securities, or MVLs for short, was less than $35 million. Think of MVLs as the total worth of all the company's shares and other securities that are publicly traded. If this number stays low for too long, Nasdaq says it's a red flag. That's why they have rules to keep only solid companies on their exchange. Now, the good news is this is not an immediate delisting. The company has a grace period of 180 days, that's about 6 months, to bring its MVLs back up. To do that, they need their MVLs to stay at or above $35 million for at least 10 business days straight. If they manage to do this, Nasdaq will say, okay, you're back in compliance, and we'll move on. But if they don't, well, Nasdaq will send another notice, and then things could get serious, leading to a delisting. The company is saying they are actively watching this situation and exploring options to fix it. However, they are also reminding everyone that there is no guarantee they will be able to get back into compliance. This whole situation stems from the company's class A common stock and its associated warrants. The report mentions that the class A common stock has a par value of just $0.0001 per S-share. This basically means it is a very nominal value assigned for legal purposes. They also have redeemable warrants that allow holders to buy one share of class A common stock at an exercise price of $11.50. It's important to note that both the common stock and these warrants are currently trading on Nasdaq under the symbols RAIN and RAINU. The report also includes several checkboxes indicating if the filing is meant to cover other communication obligations. For example, it asks if the filing is intended to satisfy rules about written communications or soliciting material. These are more procedural regulatory aspects of the filing, and for us as investors, they are less about the core business health and more about making sure the company is following all the rules. A key point here is that Enhancement Technologies Holdco Incorporated has checked the box indicating it is an emerging growth company. This status allows them to take advantage of certain exemptions and simplified reporting requirements under US securities laws. It also means they may not be required to comply with certain new or revised accounting standards as quickly as larger companies. Now, while the company expresses its intention to regain compliance and monitor its market value, the language used is quite cautious. They explicitly state there can be no assurance that they will be able to regain or maintain compliance. This sounds like a company that is acknowledging a significant challenge ahead. This filing really boils down to a warning from the stock exchange itself. Nasdaq is essentially saying that based on the market's perception of the company's value, its stock is not performing at a level consistent with being a part of the Nasdaq capital market. This can be a self-fulfilling prophecy. If investors see the delisting warning, they might sell even more stock, driving the price down further. Looking at this from a Warren Buffett perspective, we need to ask, what is causing this low market value? Is it a temporary market blip, or is it a reflection of underlying business problems? The report mentions that additional factors could cause actual results to differ from forward-looking statements, including potential adverse effects on the company's business related to the disclosures made in this report or the initiation of new legal proceedings. This suggests there could be more to the story than just low stock price. Often, when a company's stock value plummets, it's a sign that investors are worried about its future earnings growth or its overall business model. For Enhancement Technologies Holdco Incorporated, the immediate focus will be on generating positive momentum to boost their market value. This could involve announcing new promising products, securing significant partnerships, or generating stronger financial results. Without concrete operational improvements that convince the market of the company's future potential, regaining compliance might be an uphill battle. The fact that they are an emerging growth company might offer some flexibility, but it doesn't change the fundamental requirement of maintaining a certain market valuation on the exchange. So what is my take on this situation? Enhancement Technologies Holdco Incorporated is facing a significant hurdle in maintaining its Nasdaq listing. The company's future direction hinges on its ability to reverse its declining market value, which in turn will likely depend on its business performance and investor confidence. The risks are clear. A delisting could make it harder for the company to raise capital in the future and could negatively impact its reputation. The opportunity lies in successfully navigating this challenge and proving its long-term viability. Alright, that is our breakdown of Rain Enhancement Technologies Holdco Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.